What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about the moves in the markets as gold and silver start the recovery. We're going to take a look at some data and some opinions as to what analysts are saying. Is the rally still intact? Is the bull market still intact? You know, we kind of know what the answer is, but I want to go over a bunch of different opinions along with taking a look at the overall indexes. The tech sector has been doing some funny things along with 3 growth stocks that we're also going to take a look at, as these are your market minutes, guys. So I hope you enjoy this video. Last but not least, thank you so much for supporting the channel. Yesterday's video got way more likes than normal. We finally hit 29.7k, so let's get this channel to 30,000 subscribers. Sub growth has been a little bit slow recently, but I guess, you know, we kind of get into the same things, and I'm going to be changing the channel up a little bit, you know, rebranding, some new exciting videos, some new exciting topics. So hopefully that can spur some growth and spur some excitement. But anyways, guys, let's get straight into it. And last but not least, if you do support me, the channel and all the videos, then kindly explode that like button. It takes just 1 second every time. Along with, if you are a new viewer to the channel, haven't had a chance to subscribe yet, but you appreciate constant, steady updates in the markets, you like my videos, then of course don't forget to catch that subscribe button and ring the market bell for notifications. And let's get straight into this market recap. So the first thing we got to talk about is comment of the day, guys. So first comment of the day goes to Laurie, maybe adding to some positions. Kier isn't taking all the stimulus back, and another stimulus is still likely. Bitcoin had a pullback too. Second comment of the day goes to Ian. Aaron, my main man. OMG, I think you're dead on in your video today. It was unbelievable what happened. Shock, shock, shock. Better day tomorrow, my friend. Tapper light and be calm. Thanks so much, Ian. You're awesome, and I love your comments. So it's nice to hear from you. Last but not least, Kai turned up Mela. Sorry to hear you're the biggest precious metal bull on YouTube, but the rest of us saw nothing but gains today. All love, fam. Stay blessed. And today's a much better day. We did, in fact, actually pick up some precious metal stocks. I realized, you know, that I made a trade, but I didn't spend all the cash in my account, so I actually bought 2 mining stocks today, which I will be posting on the new channel, which is Departure Stocks. So let's get this channel to 400 subscribers, but long-term goal of 1,000 subscribers. So if you haven't had a chance, it's in the description below. First link, check out our brand new channel, Departure Stocks. Trying to get this to 1,000, and that's just a short-term goal. I want to grow it much more than that, of course. But like I said, I will be posting that new video on which 2 mining stocks I bought today. So tune in. It should be up by the time this video has been released. And then last but not least, before we dive into all of the recap, the news for gold, those 3 stocks, the charts, and all of that good stuff, I wanted to update you guys on our full access insider group. So for all my full access insider members, we have added the November portion, and we do have an extended video, 23 minutes long, dropped this past Sunday, along with our portfolio update. I will be posting some more trades this month, and we're going to put out a few more things in terms of content for you guys. I want to put together a document when it comes to valuing a company, reading the financials, and a few important things that we should be looking at when it comes to the mining sector. So stay tuned for that. You know, what to look at when it comes to an exploration company, a producer, some information that I think is really important, especially in these times where, you know, there's so many gold and silver exploration companies and we don't know what to pick. So kind of like a checklist, but also I want to make a document where we go over just simply, you know, learning how to value a gold and silver exploration company. I think that that's very important. So I will be putting that in. And for anyone who's on the fence or hasn't thought about joining yet, just $10 a month or $100 a year, and you have access to our full public portfolio, all the trades we make, a private video every week, and everything else that I will be adding to this group. So the group's been going pretty good so far. We've got an awesome Facebook community, and as you can see, guys, now it's populated with a ton of content, which is great. So you join, you get access to all the content. All right, so let's dive into the markets now and see what's going on. And the Nasdaq's actually in the red, down 1.29%, with the S&P essentially flat and the Dow in the green. It's almost like value stocks now, and all those beat up sectors are the ones that are rallying due to this cure from Pfizer. But I'm not buying into it just yet, guys. So the Dow slightly higher while the S&P and the Nasdaq slipped as tech companies lost some luster. Nasdaq, Netflix, Amazon, Facebook, Microsoft extended losses. Apple announced its first chip, the M1, at an event kicked off at 10. Stock was trading slightly higher. So Eli Lilly also released an emergency experimental treatment, you could say. So that's some more positive news regarding this global illness. Taking a look at the Nasdaq, I wanted to point out something that initially, when the media announced that Biden was the winner, we saw the NASDAQ go crazy, just rally like no tomorrow on hopes of more stimulus. And then we dropped off a little bit because of this whole cure and maybe, overvaluation, or the market maybe speculating that there won't be more stimulus, which I really doubt. I really doubt that there won't be any more stimulus. Now, gold took its hardest hit, and I believe it was 6 to 7 years this week. As we can see here, it dropped over $100 per ounce. And we're finding some ground around 1875. We did get as high as 1885, almost 1890, which was a very nice bounce for gold. But I want to take a look at the US dollar. That's something, that we follow very closely. And it's at 92.97 right now. So the dollar didn't gain back that much room. I mean, it gained back a little bit, but I still think that things are looking fairly decent for gold. I mean, we didn't go below 1850, which was a very important level that we talked about in yesterday's video. We'll be monitoring it, we'll be watching it, but I think gold is just going to kind of hold this level. I mean, it was looking very good last week. We'll put it like that. It was looking very good last week, and then that massive drop definitely, put us back into this sideways trend. But let's take a look at some analyst opinions for gold and also for silver. Silver's having a bit better of a day, up to 24.28 per ounce, up 2.4%. But also silver looked like it was breaking out, and then bam, it got smacked again. So let's see, what they have to say. I've got a couple different opinions, and then we'll take a look at those three stocks. I'm not going to talk about the two precious metal stocks I bought on this channel, as I want you guys to go to Departure Stocks, subscribe, and watch the video that I will be posting and shooting right after this. So this cure will be a catalyst for higher inflation, so all road lead to gold. Incrementum AG. The gold bull market still looks healthy despite Monday's $100 price decline, the biggest one-day drop in 7 years, according to one fund manager. So let's see what he has to say. Ronald Peter Storfelli, fund manager of Incrementum AG and one of the authors of the annual In Gold We Trust report, said Monday's announcement that Pfizer and BioNTech potentially have a cure could actually be the catalyst to drive gold prices higher. So this is an interesting opinion, and I really wonder, what he's got behind this theory. So although prices are still under the psychologically important $1,900 an ounce level, we got as high as 1881, almost 1890 actually. So Storfelli said that if investors want to know where gold prices are going, look at other commodities and how they are contributing to rising inflation. While gold prices dropped 5% on Monday, oil prices rallied 10% as investors became optimistic that this cure would boost global economic growth. I've been saying it a lot lately in several presentations, but all roads right now lead to gold. The major inflationary driver going forward will be this. Storfelli said a perfect storm is brewing in the gold market as rising consumer confidence on potential cure meets all liquidity that has been pumped into the financial markets since the spring. He added that even if economic activity improves at the start of the new year, there is still incredible pressure on central banks around the world to maintain their ultra-loose monetary policies. This is a perfect environment for both gold and silver. Central banks are actually quite desperate to create more and more inflation, so low nominal rates and higher inflation rates mean negative real rates forever, basically. All government debt is not going to go away because we potentially have a cure. As for what investors should do following Monday's price drop, Storfelli said he's looking to use this as a buying opportunity. So we have always said this is a stealth bull market in gold. What should you do in a bull market? You should buy the dips. So I think the foundation for the bull market is here, and it's stronger than ever. So a lot of us said bad news. A lot of people were saying, oh my gosh, is this going to be the end of the bull market in gold? Well, some people are saying no. I'm still saying no. I think that stimulus will prevail. So from Jim Wyckoff, gold and silver bounce back Tuesday. Bulls have more work to do. Gold and silver futures prices are posting solid gains Tuesday, but still have a way to go to reclaim Monday's strong losses that produced some near-term chart damage. Precious metal bulls are now working to stabilize their markets and make some progress today. A few more opinions, guys, and then we'll be on to those three growth stocks that we're looking at and the charts, and then that'll be it for the video. And so far, we're only at 11 minutes. So after shedding $100 within hours, the gold price is back to recovery mode, and that is to be expected, according to Commerce Bank, which says it's too early to rule out this whole global illness from the equation. It's too early to dismiss the threat of this global illness. It will take some time yet for sufficient quantities of any cure to be made available for widespread immunization to be achieved. The risk appetite triggered a surge in bond yields. Yields on 10-year U.S. Treasury soared 15 basis points, putting them at their highest level since March due to increasing opportunity costs. This likewise weighed on gold. As a result, there was less demand for gold as a non-interest-bearing investment. So, interest rates. This is what Commerce Bank says when it comes to the sell-off. It is unlikely that central banks will return to their rather normal monetary policy. If anything, it looks as if further easing is in the cards. We therefore regard yesterday's gold price slide as more of a brief setback rather than the start of a prolonged phase of weakness. This is also suggested by today's price performance. The gold is now back at 1890, and yesterday is euphoria on the stock market has also largely evaporated, which we saw. And there we go, guys. We've got the PlayStation 5 coming out in 2 days, and I guess that's what I was looking at before shooting this video. So let's get into those 3 growth stocks. And the first growth stock that I wanted to talk about was in fact a company that we've covered for such a very long time. The company is Else Nutrition, or ticker symbol BABY on the TSX Venture, and their stock has been doing really great. We did an interview with their CEO recently, posted it on the channel. I believe it's just a couple videos ago. So if you are interested in Else Nutrition, I believe it, yeah, just 5 days ago, you guys can check out that interview. But Else Nutrition is one of my top growth stocks for 2020, not just because we've worked with them in the past and, you know, we've done sponsored videos with them, but they've been a really awesome performing company. I mean, we started talking about them at 30 cents, and now they're up to almost $3. But I really do think that, you know, with a $218 million market cap, this company has the potential to be a billion-dollar company. So if that's the case, guys, I could see this being a double-digit stock at some point with the potential uplisting onto a major exchange. That's just simply my speculation. You know, I can't predict the future, but I think that Else Nutrition in this environment has that kind of potential, especially in the world that we're in. Vegan stuff really tends to stick with millennials. They're addressing a really awesome market, which is the infant nutrition market. But on top of all of that, you know, they're not just going to be an infant nutrition company. They have a whole product line for people who just want to focus on vegan stuff, along with, you know, older people, nutrition for older people. So it's a very scalable company. It's going to be really interesting to watch it grow. And it has done good since the interview too. We're up from around $2.20, $2.25 all the way up to $2.68 now. So far the stock has been doing pretty good. And if we look at the 1-year chart, I mean, we can see these nice rally pullback, rally pullback, rally pullback, rally pullback, rally pullback, and hopefully, you know, we're going to go above those 52-week highs of $3.40. I wouldn't be surprised if we go somewhere to around $4 or $5 before the next pullback. So exciting time for Else Nutrition, and that is definitely one stock that is on my watch list. I finally got a position in this company around $2.25, and I plan to hold that for the long term. Really plan to hold that. Now the next stock, and this stock has seen a little bit more volatility over the last little while. About a month or so ago, back there in September, it had a tremendous run from $1.16 to almost $5. Tat Lifestyle and Wellness. They've been putting out a ton of news. You know, they've rebranded. They have a website now, TriTatUSA.com, where you can go and sign up and get your free pack. So that's pretty interesting. Check that out, guys. But one thing I like now about TAT is the chart. I will admit it hit lows of around 224 recently, and it's pulled its stocks back up, and it's looking like it might be poised for a nice run. So simply just looking at the charts, their news flow and what's to come, $230 million market cap, once again, just a couple $100 million, and this company is going to be a very disruptive company if everything goes well. So TAT's looking like another interesting stock to take a look at. Now the third one, and it doesn't come as a surprise, but MindMed did pull back today. MindMed pulled back over 10%. At one point, we were down to $1.02. MindMed seems to be finding some pretty decent support around $1 per share, which I'm liking. Although I'm not liking the pullback today. Pullbacks are necessary in terms of consolidating, and I'm just happy that this thing remains above $1 because I think that's a very important level to watch. And if we do look at the candles, technically we are making, let's hope that this momentum can remain intact, and I am looking for a potential uplisting in the quarters to come. I know they have plans to get onto the NASDAQ. I think that that will really be the next thing for the company, but we can't argue with their extensive clinical trial pipeline, what they're trying to cure, mental health issues. These are going to be huge, especially due to this whole global illness. And there's two pieces of news. Now, it's not recent news, it's about a week old, but I wanted to reiterate MindMed announces the completion of phase 1 study measuring dosing effects of some of their psychedelics. So read this for anyone who hasn't had a chance yet to get a better idea of what's going on with MindMed, along with they did announce on October 30th that they closed the upsized financing of $28.75 million with strong institutional demand for psychedelic medicine. So they actually upsized that $25 million financing. Now let's just quickly hear what JR had to say. The strong institutional investor interest from this oversubscribed financing demonstrates the vast appetite for companies pursuing clinical trials of psychedelic medicines with the FDA and other regulatory bodies. With our sights set on the NASDAQ uplisting, this fresh funding will further assist the MindMed team in our mission to build the most diverse development pipeline of psychedelic-inspired medicine and experimental therapies for patients. Post-financing, the company now has cash reserves of $50.1 million to enable continued progress of its clinical trial pipeline of psychedelic-inspired medicines and experimental therapies. So $50.1 million in cash reserves, and the company's market cap currently sits at, let's just double check here, guys, on the general, but we're sitting at 394 million Canadian right now. So with that upsized financing, looking pretty good. So that's it when it comes to the 3 growth stocks that I'm watching. I just wanted to reiterate that. And now let's take a look at the charts. And we are seeing a big sell-off for some of those stocks in the green sector. And I was waiting for this, to be honest. I hate to say it, but ACB, Organigram, Ianthus, Tilray, Charlotte's Web, Body and Mind declining double digits, with ACB leading the show down 25%. We are seeing, however, some green. Ignite, Zenabis, and IIPR continue higher. Although IIPR is not hitting fresh 52-week highs, surprisingly, it still remains very close to 52-week highs. Now let's take a look at the dividend sector, and it is a green day. Lots of gains for the dividend sector. We are in fact seeing Extendicare, Enbridge, Bank of Montreal, 3 biggest gainers. Those retirement homes have been running very nicely. We did make a video on DC stocks not that long ago. Actually, 3 cheap stocks for November. So take a look at Departure stocks for that video. Literally just put it out last week, and then all of those started to run, specifically real estate. But Brookfield Renewables dipping a little bit today. That stock's actually down from highs of 84 to 75. I might actually be looking to add a little bit to Brookfield Renewables. I want to add some to Brookfield Renewables and to Brookfield Infrastructure Partners. So guys, let's see what's going on for the gold and silver sector, and it's not that great of a day. Tourmaline, Bluestone, and Kootenay Resources, 3 biggest gainers. Tourmaline has been making a really nice recovery. That's one thing I'm happy about. Silver Elephant, Lundin, and Equinox Gold, 3 biggest losers. And it is somewhat of a red day for the gold and silver sector, yet again, despite the bounce in the price for gold. So we'll see if we can get some relief sometime soon. Let's take a look at the tech sector. In terms of the small basket, MindMed is the biggest decliner, with Alibaba and Tencent also declining 5 to 7%. EGF, Theramed, AEY, and Apple, 3 biggest gainers, and of our broader watch list. See what's going on here. Tilray, Beyond Meat, and Charlotte's Web, 3 biggest losers. Beyond Meat has been tanking ever since McDonald's announced that they are developing their own type of vegan stuff. And then Pembina Pipeline, Boeing, and Manulife, 3 biggest gainers on the day. I'm noticing oil stocks have been doing not too bad recently. But anyways, guys, that's it for the video. Thanks so much for watching. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in your next video.